I was browsing through. There's so many options videos out there.
Mm-hmm. Yeah.
And I think right now what most people need is this like shorts.
Yeah.
Just a quick short explanation of, and something else, not stocks.
Right. This shouldn't be a long-winded explanation of here's what a put is, here's what a call is, right? It's very simple, right? Like puts are buying, we're going to talk about buying. Buying calls is betting the shares are going to go up in value. Buying puts is you're betting they're going to go down in value. Writing is you're putting money into selling the option to someone else that the shares are either going to go up or down in value, right? Where we don't need to belabor those. There's a million videos out there that talk about that. The value that we're going to provide through doing this is talking about what those things actually mean to the average person who wants to trade options. But
options as intended.
Options as intended, and also understanding that the success criteria for options is not simply on the day of expiration whether something's in the money or out of the money, right? That it's a gradient along the path.
Yeah, they're all for strategy. It's more tools than just buying and holding.
Right. If you want to buy and hold something for 20 years, just go buy shares and just wait, right? And don't do it in a specific company. Do it in an ETF or do it in an index.
Well, most people approach options as leverage, which is why they lose. But they can't even trade shares to begin with.
I don't even know that people on average approach options as leverage. I think they just see it as another avenue for trading.
It's just a product.
Right, exactly.
They're trading a different product without understanding decay, without understanding.
Correct. Yep. And you've been working with me on this for 1.5 years. Somehow. And like to me the Greeks are still Greek, right? And for how I trade options, you're right, it doesn't matter. To me, what matters is making the most use of my money that I have, to grow in a not safe way, but to grow in something where I don't feel like I'm gambling everything going to zero in 3 weeks, or 3 days, or 3 hours.
Because you can use them as intended. You have the cash, but most people, they have $1,000 in an account. They don't want to make $20 over however long. They want some leverage here.
Sure.
They want some real results, and they can't afford 100 shares of anything.
So when you have $1,000, your options are limited to a couple days till expiration.
Yeah.
And kind of out of the money.
Yeah.
Like a fair bit out of the money.
Yeah. And it's going to be a shit stock too.
Or an ETF that your decay is so fast.
Are we talking about what people usually do or what they should be doing?
We can, yeah. I mean, I don't want this to be we should go do what everybody else does. Right. This should be, if anybody watching this understands that, well, here's how everybody fails.
Yeah.
Right. And we don't want to repeat that because, like you said at the beginning, there's 10,000 videos on YouTube for here's what a long call is, here's what a long put is. Mm-hmm. That doesn't help you understand what the risk actually translates into until you're sitting there watching your money decay faster than the price can move.
Right.
And hi doggy. And the ability for, really? Right on my phone, huh? Okay. The ability for the average trader, not investor, but trader, right, to make any money that way is really hard. It's really scary.
Yeah, yeah.
So how do you break out of that mold?
Well, generally they can't even trade to begin with, you know? If you're not hitting some accuracy level that's very, very high, short-term options may not be for you, sort of, right?
Right.
I mean, everyone says, oh, you can't. I do it every day. 1 second, 5 second, tick intervals. Because it's the same thing no matter what your time frame. But if you don't understand trading, how are you going to trade options then, you know? How are you going to understand what momentum looks like? And that's really what we're trading with options is it's momentum.
There.
We're not just when you're out of the money like that, you're trading momentum. And you don't have to understand the Greeks or why or whatever, you know? But if you're looking at everything intrinsically, it's not going to make sense. It's just not.
And you can't trade momentum when you're in the middle of a massive swing, right? Like,
well, you can. But your risk becomes...
Yes. You can say, you can assume to yourself that it's got 50% more movement left in it.
Right.
In whatever your given time scale is.
Yeah.
And you might be right. You're probably not going to be right.
Right.
For the average trader. But the real aim is to try and catch the reversal.
Yes.
To catch where momentum dies off and starts to head in the other direction, or has the greatest likelihood.
Yeah. That goes into the valley of partial knowledge I was talking about, where people who have started learning it learn more and more terms, and something works once and they can't stray away from that without understanding what it is they're actually looking at, breaking down like what caused it to happen. If you don't understand everything about it, it was just one, coincidence that happened.
That was how I got my start, was a bunch of happy coincidences.
Right.
I got my 25 grand together so that I could pattern day trade without being locked out.
Right. Back
in 2020 or 2021. Yeah, 2021. And I had a great run of 8 days where I made 5% a day.
You know what's hilarious is how people end up, what type of options trader you become largely depends on what market you started trading in.
Yeah.
If it was a bear market you started in, you're always going to think the market's going to crash. And if you started during the meme GME bullshit, you're going to look for squeezes. You're going to see what can happen for options. You're going to overhold everything, and it's going to take you years to unlearn it.
Overholding. Yeah. So actually, like you said, my very first experience with options was I was on Webull trading GME, and I bought a long call, and I looked at the chart and the potential earnings and what everything was. And within, I want to say 30 minutes of buying the call, I was up like $500.
Yeah.
I thought, holy crap, this is way better than the what the chart shows at expiration. And I didn't understand how all that came together.
Yeah.
I didn't understand the momentum. I didn't understand the implied volatility impacts. I didn't understand any of that. And so I was just like, wow, this is just going to keep going. No, it didn't keep going. It died in about 4 hours and it went the other way.
Oh, yeah, it could have. It depends on if you rode the first or second wave. I was in the Kroger's parking lot when that was happening. Like the real one, the second roaring kitty testimony, $40 one. And I just bought it. I bought some calls or whatever, and then going up 300%. I don't know, I have to look up the numbers.
Yeah.
That was amazing because it brought so many options traders in. Before we never looked at things like, we would look at shorts, but not in the way that it's like, hey, it's really great short squeeze opportunity here.
Right.
We didn't think of that. It was always, what's the float, what's the insider owner percentage? Trading changed so much since GME and the meme stocks. And I'm afraid it's drawing in people now from sort of influencers and fake success people who don't understand what they're talking about.
Right.
Speaking of GME, if you go to Super Stonk, it's all partial knowledge people, the blind leading the blind.
Yeah.
No one there's learning anything about market mechanics or how to trade or what the market's made of.
Right.
So when you look at YouTube and influencers and all that, it's just people giving each other partial knowledge.
Right.
That may or may not help. And that's hard to avoid, I think.
And like, I think it's worth mentioning, like what we're doing on this channel is we're not sitting here trying to like sell training courses. We're not selling products to people. We've got reference links up for referrals that are to, Robinhood and stuff like that. And those are pretty transparent, I think.
Right.
But as far as like, we're not going to say, oh, well, yeah, if you just buy our weekend course, we'll teach you all these secrets. No, that's not the point of this. The point of this is to have discussions about what we're learning and what, like, you have an enormous amount of understanding, technical understanding of how derivatives work and how the math underlying it works. And I'm fortunate enough that I'm in a position where I have enough capital to take the knowledge that you have and put it to good use to grow it.
Right.
And so I'm kind of in this position of representing not the everyman trader, right, but representing people who are looking at options and trading and investing and growing money while not having any source of real good knowledge out there that is not just the standard go to Investopedia, copy what's said and put it in a YouTube video, because that's crap. Like,
it's hard to make sense of it all.
Yeah, correct. It doesn't tangibly tie together until you start losing your first $1,000.
Just jump in. That's how we all started. You just jump in.
Right.
And we're going to talk about it anyways, So,
yes.
I think the way I'm approaching talking about it in a podcast is if we're explaining to our friends who want to get into it and don't know anything, how would you set them up for success?
Right. Yep. We have a number of friends who have expressed a strong desire to do it, but just kind of feel overwhelmed. And it's not even that they're not willing to risk capital to do it. They just don't even know where to begin with it. And so,
especially as real estate is looking less frothy. If you've got a couple $100,000 and you're writing ETFs, but there's a little more that you want to do.
Yeah.
Or you just want to feel a little safer because something's not quite adding up.
Feeling safer, I think, is like, you could take your 4, 5, 6% a year out of whatever, and you can scale back to live on that. But that's not like you may not be able to have a quality of life that you want to have. And so I think that's part of what inspired me to want to do this with you, is that you've given me the tools to start going in that direction and rather successfului. So and that's what we can kind of dive deeper into as we go. And I'm going to say it out loud just so it's known. Like, our goal isn't to call out specific stock picks or to say, oh, well, now's the time to buy or now's the time to sell. The intent is to arm people with strategies and understanding that outlasts the immediate time frame, whatever video it's made, like whatever time frame this video is made in. Like, today was the SpaceX launch or IPO, and we talked last night, and I was convinced today would be the biggest shit show on the market we've seen in a while, and it was the most boring ass day I think I've ever seen. Other than like, mid-February when nothing was happening. We pre-shit showed for a whole month. And then today's the day. And so actually, about that, like, 2 weeks ago, when things were just kind of rocketing up like crazy, not to keep making rocket puns, but everything was going bonkers. Right. And my net worth changed by 20% in a matter of weeks. And you were cautioning that like this is momentum being added to be able to afford the SpaceX IPO in the marketplace.
Sure.
For institutions to be able to then liquidate some of this money so that they can then participate, because a $2 trillion company coming onto the market is going to get picked up by ETFs all over the place. And those companies need to be able to have enough cash on hand to buy their shares to be able to carry it.
Yeah, it's funny. I don't really approach the market that way or on a macro scale because I'm a charts guy.
Right.
But when we look at how much it's gone up in such a short amount of time, there's all sorts of factors we can think about, but the majority of it has to be, how do we take money from retail investors?
Yeah.
And we also need them to help push it up too. The thing is, I always call it a buy the dip training.
Right.
For these instances. And we saw so much retail activity coming in for such a long time. And it wasn't even that okay, it was extreme, but it's not the most extreme thing we've ever seen.
No.
Last year we had 10% from a tweet.
Right.
When we look at sort of these patterns and how options were shifting and how IV was so high and stuff, we can take a back seat. We can still get a little extra money, but we have just in case.
Right.
And that's really the power of the options. It may crash, it might not. And it turns out we did have a few rough days, but you were able to fully take advantage of it then, while maintaining leverage, while being cash heavy.
And this is one of the things that you talk about a lot with me, and beat into my skull over 18 months. And that is, you need to be in a position where no matter what the market's doing, you feel good about it.
Yeah.
You need to be confident that you're going to win regardless of what direction it goes and how fast it goes.
Right.
The idea of writing options to cover certain situations, buying options to cover other situations, being in cash to cover other situations, holding shares, right? Like it's all, it took me a long time to understand this. And it was that there's no specific position you should be in at any given moment. And it's not picking the right position to be in. It's having a little bit of everything. And maybe one is stronger than the other at any given period of time.
Right.
But you're staving off risk by holding these other positions with keeping implied volatility and time and decay all in mind so that they're not running roughshod over you when they're not applicable.
They're insurance quotes.
Right.
And you can trade insurance quotes as well.
Yep. You one of those sayings was cash is a position too. It took me a very long time to appreciate. Very long time. When your money is sitting there and it's burning away as a option becomes devalued, and you're seeing 30% loss on something, because not only is decay happening, but the price is going in the opposite direction of what you need. A long time is hours, not just months.
Right. It's per candle.
Yes.
It's one painful candle at a time.
Yeah.
When we think about strategies to approach this, I think this is where most people aren't seeing the true value of options. And it does require a certain amount of capital to play correctly. I mean, not for me, but
Playing correctly just means you're not losing.
well, what most people can benefit from options, well, in some way that they can benefit from options.
So in order to we've talked about stuff at like a really high level. I do want to real quickly talk about our, I don't want to say understanding because that's not really what it is, but the way we look at options specifically, right? So when you are, right, we can talk about calls, right? Long calls are great when you think momentum is going to shift upward in whatever it is you're buying the options for, you're buying the calls for.
Right.
So you can start scaling into these things. And when we say scaling in, we don't mean go buy 30 on the way down.
Yeah.
Buy one.
Yeah.
Use it as a tracker, right?
Yeah, I see what you mean.
And then keep an eye on it. And if it continues down, and don't buy it for this week, buy it farther out.
Yeah, buy a leap. You want to buy anyways.
A leap is
like a far dated option.
like 3, 6, 9 months, a year.
Yeah, next year is good. It's going to be so far away that so many things can happen by then.
Yeah.
And it is at that point a shares replacement in a
Yeah.
sense, because it frees up your capital. And that's the most important thing about options that we need to focus on.
So I'm going to talk about that for a second, and that is when you say it frees up your capital, what you're saying is instead of having to buy and hold 100 shares through the dip, right? You're buying the contract for 100 shares through the dip. And so instead of it costing, let's just say it's $100 a share, so it's $10,000. Instead of spending $10,000 on a call that if it's out of the money on expiration, it's gone to zero.
Right.
Let's just keep that in mind. Instead of spending $10,000 on shares, 100 shares, you're spending $3,000, $2,000 for 9 months away for the value of those 100 shares. And you still have your $6,000, $7,000, $8,000, whatever it is, available to you
to deploy however you'd like, which ideally we'd be putting into CSPs anyways for the rest.
Cash secured puts for realizing gains as it goes down.
Yeah.
Taking advantage of IV, implied volatility.
Right. It's a lot of fear
and it also allows you to pick up shares for cheap.
Yeah. You're getting shares on discount. You're going to buy it anyways. You might as well get a few extra bucks from it.
Right.
Or if you're not sure if you want to buy it, you put it down there as if you're going to, and then you get it for cheaper too.
And you threw out the line. You wanted it anyway, right? This assumes, everything we're talking about assumes you want to own this stock. You don't. You're not just looking at this as you're going shopping and you're just picking up something at, the dime store that you're going to toss to somebody else as soon as you can. This is something you want to own and you want to invest in and hold long term, but you want to get it at a good value.
Sometimes, yes. Sometimes.
Yes.
It's everything is so situational. So sometimes IV is so intense on the way down. When you're looking at 12% for a CSP on a stock that you don't care about, you don't give a shit about, but you can get 12% and it's likely going to come back up.